Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel and Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step of my process is execution, and I look at real-time order flow in Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis, and for setups for entries and exits. And I will be talking about setups today, and just to be clear, my analysis is based on the options market and order flow, but the setups I'll just be talking about an underlying asset, and those setups can be taken any number of ways, with futures, shares of stock, or options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord as well as the chat in YouTube for your questions and comments. So please feel free to post any questions or comments you might have. All right, let's get started. What I want to cover today, go over economic data and events for today. There was a key data release this morning, and then I'll briefly talk about what's coming up next week. Then I'll go through my positional analysis, my planning process for the day. Then I'll review a few setups. And then we'll take a look at the live market. And when we get to the live market, if anybody has anything that what they want me to take a look at, please let me know. Stocks, other stocks than what I have planned to talk about. All right, let's get started. First of all, economic data for today. The big number for today was the U.S. non-farm payrolls at 8:30 a.m. Eastern Time. Shown here, came in lower than expected and also lower than the previous number. And there was quite a reaction both up and down to this number we'll take a look at in a few minutes. And then the other numbers, the average earnings looks like a little bit better than forecast, employment rate in line. All right, so that's the data for today. Now next week there will be a couple of key data reports. I'll talk more about this on Monday, but CPI and PPI come out next week. So again, I'll talk more about this on Monday. All right, let's get started with positional analysis. This is the S&P 500 futures in Bookmap.
Stop ESU 3 CME sell 353.
And just to point out, this is the data release at 8:30 a.m. Eastern Time. Initially a very bullish reaction and rejected around the SPY 440, SPX 4415 level. Price reversed lower, found support. Looks like an inverse head and shoulders there throughout the morning at the SPX 4400 level. That is a very key level. That is the absolute gamma strike for
ESU 3
SPX.
CME sell 404.
By the way, can anybody hear those alerts? I have alerts set for stops and icebergs. Just curious. In Discord or in YouTube. All right, so I will assume not. All right, so levels in play, and this really took a while to play out. A lot of chop in the morning, and then price finally reversed higher right around the kind of the typical 10:30 a.m. Reversal. Oh, Cole says he can hear them. Let me thank you, Cole. I'm going to turn these off. Okay, thanks again, Cole. All right, so levels in play, primary levels as support, very clear. The SPX 4400 level and the SPY 439 volatility trigger. Before I go take a closer look at this chart, go in any further, I want to take a look at a larger time frame. This is the SPX chart for in Thinkorswim, showing 30-day 1 hour. This is a 30-day 1 hour chart. Let me point out some levels on this chart. The dashed blue line showing the lower and upper daily expected move for SPX. And note now that SPX is right up at that upper daily expected move. And then the dashed purple lines are showing the lower and upper weekly expected move. And so far SPX is appears to be just about unchanged for the week, right in the middle of that range. Maybe a little bit lower for the week. There also this chart is also showing key Spotgamma levels. For SPX, there's the SPX 4200 put wall. That's the strike with the largest net negative gamma that can be expected to act as support. That is not in play, obviously. The next level up is the 4400 level that I mentioned before. That is the Spotgamma absolute gamma strike, a very key level. By far the most gamma, put and call gamma is located at that level. And then just above that is the volatility trigger at 4410. This is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. We'll take a look at the Vanna model in just a minute, and that will become more clear, showing how market makers' delta notional changes with changes in price and implied volatility. So SPX is now trading above that 4400 level, as well as above the volatility trigger and the lower weekly expected move. It tested that level earlier. And then the next level up is the call wall at 4500, and also the volatility trigger again, that is Spotgamma's proprietary gamma flip level. Above that level, like SPX is trading now, market makers' position on the gamma curve is positive. So that's the current condition. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. All right, so let's take a look at levels that are in play for today. Let's go to a 1 day, 1 minute chart. Got the same levels on this chart. Here's the volatility trigger. And in the morning, there was a lot of price action above and below that level. And note that SPX opened just above opened and moved down just above the lower weekly expected move, and has been trading up, and then finally this upper daily expected move at about 44.40 is acting as resistance so far today. All right, let's go back to Bookmap now. So we see the levels in this larger range, as well as the SPX levels and range for today. And in my Bookmap chart, I'm showing the same levels, the same SPX levels, as well as SPY levels. And there's the upper daily expected move for ES. And that is just about at the same level as the SPX level. And then SPX levels, again, there's the 4400 level. And note there's about a 35-point difference between ES and SPX. So ES 4435 is equivalent to SPX 4400. And note that now I am just showing my column of cloud notes. The Spotgamma cloud notes were not updated. They were still showing a 47-point difference between ES and SPX, and that's just not correct. So I just gained a little bit more screen space here, and I'm just using my cloud notes. Another level in play. These two levels, the SPY 440 level, as well as the SPX 4415 level, noted as resistance in the Spotgamma AM Founders Note, acted as resistance this morning. And then price finally broke above that just before noon. I guess after the European close, price got going higher. All right, so those are the levels in play for today. For the S&P 500, there were some shifts in levels. For SPX, the volatility trigger did shift higher from 43.95 to 44.10. Otherwise, the put wall, call wall, and absolute gamma strike are all the same, unchanged. For SPY, the volatility trigger did shift lower to 439, shown on this chart. And then the call wall shifted higher, and that's somewhat bullish, indicating that the SPY call wall shifted up from 445 to 450, moving that potential ceiling or trading range, the ceiling for the trading range, up from 445 to 450. So anytime there's a move higher in a call wall, I interpret that as bullish. All right, so that's the S&P 500. We'll talk about setups in a few minutes. Here's Nasdaq, and again, I'm just showing my cloud notes now. Before I take a closer look at this chart, let's take a look at a QQQ chart. Just showing levels in play. And 368 is the volatility trigger, and price has moved above and below that level. Just before noon did act as resistance, and now price has broken above up to the 370 call wall. And note for QQQ, that call wall did shift lower from 372 yesterday to 370 today. So that ceiling, and this should be, if the call wall does its job, should act as resistance. So on a bullish Friday, it may not do its job. But anyway, that is the call wall for QQQ. Again, dropped lower from 372 yesterday, and that yesterday the call wall also shifted lower. So On Wednesday, the call wall for QQQ was at 375, shifted lower yesterday to 372, and today to 370. Also for QQQ, the volatility trigger did shift lower slightly from 369 to 368. There were no shifts in levels for the NDX. All right, let's take a look at the Vanna model now. Actually, go back. We need to look at Bookmap NQ. Typically, the levels are not quite as clear on NQ as they are on the S&P 500. This 15,150, NDX 15,150, did act as resistance earlier today after the data release at 8:30. Then the 15,125 acted as resistance. And there's the 368, QQQ 368 volatility trigger acting as resistance. And then price moved higher, again probably after the European close. Now up to the upper daily expected move in this cluster of levels. There's the QQQ 370 call wall, NDX 15,200 absolute gamma strike and call wall, and also the upper daily expected move. So a cluster of levels there that could act as resistance. All right, let's take a look at the Vanna model now. I like to look at this chart every day to understand how market makers may react with changes in price and implied volatility. So this chart is showing market makers' delta notional, their delta exposure, and how that changes with changes in price. Delta notional shown on the vertical axis, price shown on the horizontal axis. There are two curves on this chart. The first, the light gray, is showing how market makers' delta notional changes with changes in price only. What this is showing is that price increases, market makers will need to sell futures to hedge their delta exposure. That's what I was talking about earlier. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. And the second curve on this chart, the purple curve, adds implied volatility to the equation. That's showing how market makers' delta notional will change with changes in price and implied volatility. And that change in delta with a change in implied volatility is the Vanna effect. Hence the name of this, the Vanna model, and that is a second order Greek. So this purple curve is showing that market makers will have slightly less delta notional to hedge as price increases, but they will have significantly more delta notional to hedge if price decreases. So the left side of this chart is typical of a negative gamma environment. All right, let's see where SPX is trading right now. So I've got SPX at around 44.35. All right, so that's about where I'm holding my cursor now. This vertical line. So at this point, this is showing that there's really no tailwind if price continues to move higher. The market makers delta notional will not change significantly. And SPX trading lower this morning. Let's go back and see where it was trading this morning. Just a moment. So at 4,400, that's right, 4,400 was support. So there was a slight tailwind. This morning as price moved up, market makers could buy back short hedges. So a slight tailwind this morning. And if price continues to increase, market makers will have to start selling futures to hedge their delta exposure. All right, so that is the Vanna model for SPX. It gives us an idea of how market makers may be hedging with changes in price and applied volatility. Let's take a look at SPY. So at the beginning of the day, market makers' position on the gamma curve for SPX was slightly positive. And for SPY it was negative. Not a lot of change in the Vanna model for SPY versus SPX. SPY right now is trading at 442, so right around here, just the same, pretty much the same as SPX. Not much of a tailwind if price continues to go higher up to a certain point, and then at a certain point, market maker hedging, as predicted by this curve, will be a headwind for price. And then finally for QQQ, pretty similar. All right, let's take a look at some of the data behind this. What I'm going to look at is gamma notional for SPX, SPY, NDX, and QQQ. Note all these numbers did shift lower from yesterday. So SPX, gamma notional, became less positive than yesterday, and SPY, gamma notional, became more negative, and then QQQ, gamma notional, shifted from positive yesterday to negative today. So that implies, compared to yesterday, implies more volatility. All right, so my thesis for today was looking for a little bit more volatility, looking for a larger, higher trading range compared to yesterday. For example, for all the indices, S&P 500 and Nasdaq, and slightly bullish for the S&P 500 based on the shift higher in the SPY call wall, and just slightly bearish for the Nasdaq based on the shift lower in the in QQQ. The call wall and shifted lower in QQQ. All right, let's take a look at some setups. I'm going to start with the S&P 500. And the first thing I want to do is see what options traders were doing today. And up until just about 12:30, 1 o'clock, they were buying calls hand over fist in the S&P 500. So what this chart is showing is price for SPX and the hero signal. And this is a combined hero signal, that is hedging impact real-time options, a combined signal for several S&P 500 products, SPX, SPY, XSP, and ES futures, all into one combined signal. So this is showing options trades and market maker hedging activity for all these different instruments, and it is definitely bullish today. Notional value for the combined signal is about 4 billion. So let's take a look at the individual components here, and then we'll take a closer look at this chart. So first of all, SPX. Notional value 1.44 billion positive, and note it did shift lower just about 12:30, starting to shift lower. So at that time, options traders stopped taking positive delta positions. So that's SPX. SPY also positive, 1.05 billion. Also, it looks like they stopped around 12:30. Then ES futures, that continues to move higher at 1.56 billion. So add that all together and you get the combined signal at just slightly less than 4 billion. So let's take a closer look at this. So it looks like there's some sharp movement here. Quick move lower. Got that message from Bookmap. Let's go back. Take a closer look at this chart. And let's see what options traders were doing. And I'm going to zoom in on this just a little bit. Let's say up until about 1:30. So what this chart is showing is that traders were buying calls. That's shown by the rising orange line. Traders buy calls, market makers sell the calls, and they have to buy futures to hedge their delta exposure. Again, remember this is for SPX, SPY, and ES futures. So this number, now it's slightly negative. Earlier in the morning they were actually selling puts too. So we can zoom in just a little bit here up until about 12:30 or so. Both numbers are positive, so they were buying calls and selling puts in the morning, and that led to bullish setup. And we'll take a look at the live market in just a minute. So I'm reviewing the setup. One thing I want to point out, let's go back and just take a look at the total signal. I'm comparing all expirations shown with the purple line and 0 DTE options trades. Those are trades that expire today, so they're trading 0 DTE options. And note that the 0 DTE number shown with the green line is very close. It looks like it's over 75% of the total options notional value today. So 0 DTE options definitely driving price today. And we can actually turn off all expirations. And you just see the very close correlation between 0 DTE trades and price action. All right, let's go take a look at Bookmap. I'm going to zoom in just a little bit. So here was the ideal, looking at hindsight here. there was the long setup. So you know that traders were taking positive delta positions from the open. So just looking at Hero, you would be looking for a long setup. You know, I thought order flow was if you look at the subchart here, a little bit difficult to read. And this is kind of unusual in the morning, seeing price move higher and stops and icebergs moving lower. Not unusual to see icebergs moving lower this line, but stops, usually that is more, and price is more in sync with stop orders like later on. But anyway, there's the reversal higher at the SPY 439 volatility trigger just after 10:30. Let's zoom in on that. So just looking at order flow, ignoring the subchart, the shift in order flow is pretty apparent. Just looking at the volume dots there. Pink dots, market sell orders on the way down to a level that you expect to act as support or resistance, acted as support in this case, and then aggressive buyers start to come in as options traders were taking positive delta positions, as they were buying calls and also selling puts at this point of the day. So there's the long setup in the S&P 500. All right, let's take a look at Nasdaq. And Nasdaq reversed higher at about the same time. We can zoom in on that. So it looks like there was a stop run down to this level that's shown by this falling yellow line. Also iceberg orders selling, larger traders selling with iceberg orders shown by the falling light blue line, but you can clearly see the shift in order flow. Aggressive sellers shown by the pink dots, that's buy minus sell, and then aggressive buyers start to come in and move price higher, and price continues higher. All right, let's see what options traders were doing. So let's change this back. Let's first go to all trades, go to our default signal. I'm going to take a look at Nasdaq. And Nasdaq, the signal was not nearly as clear as the S&P 500. And it seems like that's been the case for most of the week. So this is a combined signal for NDX and QQQ. So really not much clarity after about 10 o'clock. Hero was trending lower. And let's see what traders were doing. So they were buying puts and buying calls. So we'll zoom to that level. So there's really no, maybe a slight shift higher in this call line. But other than that, no real clarity. Let's go take a look at the total signaling. All right, so this is pretty typical again this week that for time periods of the day there has not options traders have not really been in sync, or really price has not been in sync with options traders for the Nasdaq. All right, let's take a look at some stocks now. And I'm going to continue what I was doing yesterday, taking a look at alerts and some setups. There were some good setups in stocks today, and also QQQ based on these alerts. So I'm going to start, and I just picked out a few starting in the morning. So the first thing that I want to take a look at is QQQ, and this is at 10:22. So at 10:22, and green, I don't have any information. I'm looking at this volatility alert here, and I clicked on it and it brought up this hero chart. So this is what I'm looking at. I clicked on this, it brought up this chart. So this alert fired off right around here, 10:22, and green, that's got to be a bullish alert. Green price, this arrow moving up. All right, so let's go take a look at Bookmap now, and we'll just go to QQQ, and I marked the setup on the chart. So this is the first setup right here, this first green rectangle, a little bit early. So if you got in there, and that would have been a kind of a natural place to get in. This is a C1 level, not at a round number. That is provided by Spotgamma, just above the 367 level, and also the point of control, which in stocks is just really controlled by the opening print, and that will stay at this level until the closing print. So here's the opening print right there. Point of control remains at that level. So there was the first entry, and depending on how wide your stop is and how you took it, if you bought a call at that point, you're perfectly fine. And then there was another signal we'll take a look at in just a minute that provided a better signal if you're trading futures, something more leveraged with a tighter stop. All right, so that was the first signal. Let's go back to Hero now. So that was the first QQQ signal. Here's the second. This was a better signal, and that one fired off just about between 10:38 and 10:39, something right in there. All right, so let's go back to the QQQ chart now. So there's when the second alert went off, and a much better entry. So if you caught that right away, you could have gotten in around QQQ 367 for a move up to the 370 call wall. So good for a 3-point move higher in QQQ. If you bought a call, that would have been a good play, as well as buying shares. So first signal a little bit early, second signal very good. Let's just go back to Hero. So there's the signal there. We'll zoom out. So options traders really supported that until a certain point, maybe somewhere around 10:55, 11 o'clock. Then turned around again 11:30. All right, so that was the first setup. That was good setup. Let's take a look. So that was QQQ there. And then the second signal here. Let's take a look at Apple. So the Apple signal was a little bit early as well at 10:23. So I clicked on this. It brought this chart up, 10:23. And it must be looking at this divergence here. So price dipped down. The hero signal continued higher. All right, let's go take a look at Apple in Bookmap. So here's the signal in Apple and Bookmap, a little bit early. Again, depending on how you traded that, with a wider stop, Apple shares, or an option. If you bought a call, you'd be just fine. Or a watch price for a better entry. Let's go back to Hero. We'll zoom out. So again, remember that was at 10:23. So right about here, this signal is a little bit distorted by this large block trade here, this vertical line. So some large institution, there was a large block trade that happened all at once. Let's see what they did. So some large institution came in and bought a lot of puts, and that reversed pretty quickly later on. So a little bit early again for the signal in Apple, but turned out to be a good signal. Right, the next. So we've looked at QQQ. QQQ, the two signals there. First one early, second one very good signal. Apple early, but still okay depending on how you traded that. And then the next is Tesla. And remember, we looked at Tesla yesterday. So this alert went off at 10:40. Right about here, and this was an excellent signal. And it must be, again, signaling this divergence. Price dips down while Hero options traders continue to take positive delta positions even though price dips down a little bit. So let's take a look at Tesla and Bookmap. One thing to note for Tesla is 280 is the call wall. And note that that level did act as resistance as expected earlier today. So if you're just watching that, that would have been a good short setup. we'll go back and take a look at Hero in just a minute and see. I would imagine at this reversal, traders were taking negative delta positions. But anyway, we're focusing on the alert now. So here is based on the alert, there's the setup. So an excellent long. Note the absorption shown by this light blue green square at the 275 level. Price reverses higher as traders were taking positive delta positions, and price moves higher. So just like yesterday, the Tesla alert pretty much nailed the bottom and gave you a very good long setup. Well, let's go back and take a look at Hero. So really looking at this, sorry about all the scrolling and jumping around. All right, so this really kind of reinforces the idea for a long. And this is pretty similar to the NVIDIA post that I put in Discord and Twitter yesterday. So this, let's just take a look at the total signal. So if you're watching Tesla in the morning with the price dropping and Hero pretty much flat, this is definitely not supporting a short. So at this point, you would be waiting for a long setup. And it really came here when that alert fired off with that divergence, and options traders started taking positive delta positions and price moved higher. So looking at this from the beginning, this is definitely not bullish. Hero options traders not supporting this move lower. So based on this, I would definitely be waiting for a potential long setup. And again, that alert was the signal to look for an entry point. So Truman says he came in late. What is sending you the signal in Spotgamma, the alert? So this is something new, and I'm clicking on this bell, and this is all in. This bell is all in the dashboard. So that is the Hero. Here's the indices page. It's shown here, as well as the founder's note shown here. So you can always go to this upper right corner, and these alerts, I talked about this a little bit yesterday. Spotgamma has been providing these call wall alerts. So for example, this for Amazon here, call wall breached. Those have been available for a couple of months. So that indicates that price has moved above the Amazon call wall. Now these volatility alerts are new. I believe they just started on Wednesday. So these are new, interesting. I'm just kind of exploring them now. And so I've just picked out a point to start here. And note these meta volatility alerts. They were not good. They did not work. And I would be hesitant to take at this point in the day, 11 o'clock, the whole entire market was bullish. I would be looking for bullish alerts. So again, this is something that comes with Spotgamma, with your Spotgamma subscription. And I think when you click on this, where you go depends on your subscription level. So I have an alpha level subscription. So when I click on this Amazon call wall, for example, it takes me to the hero chart. So that is showing the call wall breach for Amazon at 11:51. So right about here, that's that call wall breach at 11:51. So those have been around. The call wall and put wall breach alerts have been around for a couple of months, maybe since the beginning of April, I'm not quite sure. And then these volatility alerts just started this week, as far as I know. That's the first time I noticed them. I have not been able to find anything in the support center yet. I know that Brent talked about these earlier this year, and apparently it took a little bit longer, a little bit more testing and validation to roll these out. But now they are here, and so far I'm finding them very helpful. I'm watching a lot of different stocks, and this is something that is another set of eyes looking at these stocks, finding setups for me. So again, I'm just exploring this now, but again, so far, and of course you have to evaluate everything, any kind of alert with what you see in Bookmap and in with Hero. So let's just go. So there's the call wall breach in Amazon. Go back to the Tesla alert. So far for Tesla, yesterday and today were very good alerts for Tesla for long entries. All right, let's take a look at the broad market. So IcoJet asks, what are your settings for the absorption indicator for Tesla? All right, let's go take a look at that. Here's Tesla. Go to the absorption indicator. All right, so I have it set on automatic mode. The standard deviation interval 15 minutes. So I want it to renew pretty quickly after the open, where a lot of the volume occurs, so I can see more later on in the day. And then this SD multiplier, it changes from day to day. Sometimes I have to slide it lower, sometimes slide it higher. There may be, I just want the right amount of information on my screen, not too much, not too little. All right, IcoJet, I hope that helps. This is recorded if you want to come back and take a look at this. I suggest you maybe start with this if you want, and adjust it to what makes sense for you. All right. Okay, you're welcome. IcoJet says he got a screenshot. And D&T Matter says the SPX levels are an incredible addition you have with Bookmap. I agree. The whole idea behind this is that SPX is the base index, and market makers are hedging SPX and SPY options trades with ES futures. So I think SPX and SPY options trades and the market maker hedging activity with ES are a key driver of price action in the S&P 500. So I have SPX and SPY levels on my chart, and day after day they work. That's because, again, I think that market maker hedging activity around these levels is key for price action. And let me just point out, so I've talked about the 4,400 level. And that is just a solid level of support, as well as the SPY 439 volatility trigger. Let's go take a look and let's see where those levels come from. So let's go back to the SPX chart here. I'm going to go to SPX. Take a look at the absolute gamma levels for SPX. There's the 4,400 level. And that was the level that acted as support today. So I calculate the difference between SPX and ES every day, and I just include those on my chart. And I use an add-on from the Bookmap marketplace called Price Lines to do that. So I fill out a spreadsheet. Price Lines displays the label in the column and the line on my chart. All right, let's got a couple minutes left. Let's go to the live market. Let's see what options traders are doing, and let's go to the S&P 500. And note the hero line has really leveled off since about 12:30, and price has stalled and moved slightly lower. Let's go back to Bookmap, go to the S&P 500, and note that that did occur right almost to the tick at the upper daily expected move. And note this level comes from the options market. This is not from Spotgamma. You can get an expected range from Spotgamma. I just use the options chain and Thinkorswim to get this level. So this level I put on my chart last night. So options traders stopped taking positive delta positions, maybe started taking profits or taking negative delta positions as price approached that level, and now price may be moving lower. Let's go take a look and see what options traders are doing right now. So now it looks like they may be starting to take positive delta positions, trying to move price higher again on a bullish Friday afternoon. Let's make a couple of adjustments here. Let's look at next expiry first. So that is definitely leveled off. And it's all expiration trades that are moving higher now. I'm going to change my rolling window period, so I'm looking at a shorter look back period. This is looking at just at the last 30 minutes of data in this cumulative figure versus the entire day that I was looking at before. So looking at this 30-minute rolling window period, again, traders started taking negative delta positions as price approached that 44.40 level. that was the upper daily expected move. And then price, it took a while, but finally moved a little bit lower. Oops, wrong tool. And now options traders are back at it, taking positive delta positions. Let's go back to Bookmap. And so far to me, order flow definitely looks bearish. And I do look at these lines in the subchart, and they're all falling. Sell stop orders, large traders selling with iceberg orders, and cumulative volume delta all falling. So price traded in this range at the upper daily expected move, broke lower, made a lower high, made another lower high. Now chopping around in another range as order flow continues to look bearish to me. We'll take one quick look at Nasdaq and then wrap it up for the day. Let's go to Nasdaq. Pretty similar. Also, upper daily expected move. So far, high point for the day. Price reverses lower, makes a lower high. Now chopping around in a range. Let's see what options traders are doing in Nasdaq. Remember, we're on a 30-minute rolling window period here. So looking at a shorter time frame. And pretty similar to the S&P 500, options traders started taking negative delta positions as price approached that upper daily expected move. And there's also the so this price, I believe, is in terms of NDX. So there's the 15,200 level. So as price was approaching that level and the upper daily expected move at NQ 15,355, options traders did start to take negative delta positions, and that appears to, at least for the time being, maybe leveled off, maybe shifting a little bit higher. Looking at the 30-minute period, definitely shifting lower. So those upper daily expected moves for the S&P 500 and Nasdaq would have been good targets for bullish trades earlier today, and then a point either to take profits or to take negative delta positions. And D&T Matter says, beautiful, Doug. Thank you very much. So Floyd's Garage asks, if options traders are buying and icebergs and market makers selling, could that cause a flush? So first of all, if options traders are buying calls, for example, or taking positive delta positions, market makers are taking the other side of that, so they're buying futures to hedge their delta exposure. And then, so in that case, if options traders are buying, market makers buying, I assume, again, positive delta positions, market makers are selling those futures, so they have selling those options, so they have to buy futures. So they would be taking positive NQ or ES, so they would be buying futures in either case. And then icebergs selling could be a sign of a reversal, but often larger traders with iceberg orders will sell strength and buy weakness. So you have to look at all of it and combine it together to develop a complete picture. And I've mentioned this many times before. I'm only presenting with one screen, and I'm jumping back and forth between Hero and Bookmap. When I'm actually trading, I have multiple screens, so I can look at Bookmap and Hero at the same time and weigh all of this together to make a trading decision. So again, Floyd's Garage, that's not necessarily so easy to answer. Again, I'm looking at all the information together and weighing this. So I like to see a confluence. So if I see, let's go back to S&P 500. So here, S&P 500, this is showing that, let's go back to that 30-minute look back period. So this is showing Hero dropping as price approaches the level that I expect to act as resistance. So that is the first case for potential short setup. All right, now let's go to look at Bookmap. Go back to ES. So that is one case for a bearish setup. So I know that options traders are taking negative delta positions at as price approaches the level that I expect to act as resistance. And then the second clue is the shift in order flow here. So I see more pink dots coming in at this level. I see that larger traders starting to sell here with iceberg orders. They were buying on the way up. Now they're starting to sell. That's shown by the falling light blue line. There are no more buy stop orders fueling the move higher. This yellow line flattens out. No more buy stop orders. Cumulative volume delta, shown by the dark blue line, starts to shift lower. So all that is building a case for a short setup here. Options traders leading, price at a resistance level, order flow shifts bearish. So putting all this together, I'm looking for a short or to take profits on a long that I had from this morning. So again, Floyd's Garage, I'm putting all this together and developing a picture in my mind, a narrative of what I expect to happen. All right, so I hope that answers your question. All right, so D&T Matter says, I recently got Bookmap from Blue Jacket. I'm trying to match yours. I'll be going through your pins, trying to set up. Just to note, you can contact me in direct message. I do have started to offer one-on-one mentoring. If you want help more specific help setting up Bookmap. So just contact me in direct message in Discord if you're interested. All right, Lloyd's Garage, I hope that answers your question. D&T Matter, thanks for your kind words. Thank you everybody for watching, for your questions and comments. Have a great weekend, and we will get started again on Monday. Thanks again, everyone. Have a great weekend. Bye.